you're going to hear something in this video that you may not believe. So I'm going to go ahead and just start out right there. And that's that you can get a lower rate on your mortgage today than you could a year ago. That's right. You heard me correctly. You can get a lower rate today than you could a year ago. Now, stick with me for a few minutes, and I'm going to tell you all about it. Happy Wednesday, everybody. It's Brian Simmons here with eXp Realty in Southern Oregon. It is January 25th, and we've got a lot of great material to cover today. First, if you could do me a quick favor and just click that like button, hit the subscribe icon, and share this video with anybody you know looking to buy or sell real estate in Southern Oregon, I would really, really appreciate that. Now, before we talk about my favorite loan that gets you a lower rate than you could have got even last year, let me quickly share what's going on in the local housing market today. Between Jackson and Josephine counties of Southern Oregon, we're looking at single-family residential listings here. We had 827 active single-family residential listings this morning. Okay, that's down from 866, which is just showing that inventory is continuing to fall. 61 new listings hit the market, which is the same as we had last week. 54 price changes, 23 came back on the market, 84 went pending, which is a big jump up. 54 closed, and 45 were either expired, withdrawn, or canceled. And that all brings us to about 15 weeks worth of inventory if we were to look at just a snapshot of the 1 week. I said in video pretty recently that I could see the pending activity pick up to where it's at or above 10% of the total inventory. So 10% or more of total inventory going pending each week. And well, we're here. That happened a little faster than I thought it was going to, but here we are. That's the first time since August that this has happened, and it's quite clear that buying activity is very high. Not quite as high as this time last year, but last year we had 3.6% for mortgage rates, and now we have about 6.2% today. This week, last year, we saw 121 listings go pending with rates at 3.6. This week, this year, we saw 84 go pending with rates at 6.2. So with the rates being much higher, we're still seeing very solid buying activity, okay? And now here's the crazy part. You can actually get a lower rate today than you could this time last year. But you're probably wondering, how in the world is that possible? Well, let's go ahead and dive into that. You can do it through a program called a 3-2-1 buy down, which is my absolute favorite loan type right now because it just seems to make so much sense for the current market conditions. I'm not a lender, so I'm just going to share my personal experience and my own opinion with you today. And I really encourage you to talk to a lender, to a licensed lender, if you want to know the specifics about this program and how it all works. You want to run numbers, do all that with an actual lender. Okay, this is just my own opinion and everything. Now that we got that all out of the way, let me say this. From what I understand, lenders have these programs available for all sorts of different loan types. So you could do a 3-2-1 buy down potentially for conventional, FHA, USDA, VA, and even jumbo loans. So pretty much anyone can use this strategy. I'm going to show you an example of how this could work. Let's say you're buying a home for $400,000 and you have a down payment of 20%. Okay, that's $80,000 down payment and a loan amount of $320,000. With the rates at 6.2%, which is about where they're at today, that's a payment of $1,960 before taxes and insurance, okay? If you did that 3-2-1 buy down program, let's say we get the seller to contribute $12,000 towards your closing costs, which will go towards that buy down, okay? But we increase the price of our offer by that amount so that the net to the seller is the same, okay? So instead of a $400,000 purchase, now we have a $412,000 purchase with 20% down, which is now $82,400, and a loan amount of $329,600, okay? With a rate of 3.2%, in year one, the payment is only $1,425 before taxes and insurance. In year two, the rate goes to 4.2%, and the payment is $1,612 before taxes and insurance. In year three, the rate goes to 5%, and the payment is $1,810 before taxes and insurance. And in year four, the rate goes to 6.2%, and the payment goes to $2,019 before taxes and insurance. The obvious strategy here is to refinance before the end of year three at a rate lower than the 6.2%, which I think any lender will tell you in their experience is a very high likelihood that you'll have the option to do that well before the end of year three. I think this is such an underutilized program, and it just makes so much sense for people today. Here's why. Think about it. If you're one of those who thinks that rates are going to come down, well, great. Then this makes sense because you'll have the chance to refinance. You'll enjoy a few years of lower rates, and then you have a chance to refinance, okay? If you're one of those who thinks rates will go up, great. You'll have 3 years of reduced rates, and you'll also be locked in at a rate less than what you could probably get in a few years from now by your own predictions. So if this is something you're interested in learning more about, reach out to me. Call me, text me. It's 541-954-7758 is my direct number. Let's talk, and I'll connect you with a great local lender who can help explain all of the details of this program, give you all the ins and outs, and help you run some real numbers and see if this is something that might make sense for you. I hope this information was helpful. Again, if you're looking to buy or sell real estate in Southern Oregon, check out my website, buyingsouthernoregon.com. And please don't forget, click that like button, hit the subscribe icon, and share this video with anybody you know who's looking to buy or sell real estate in Southern Oregon. We'll see you next week.